That brings us to tonight's Market Masters, and here to talk about some of the upbeat corporate news and encouraging economic data in a positive market, we're joined by Barry Sloane, CEO at the Small Business Authority, and from San Diego, Harry Rady, CEO of Rady Asset Management. Good to have you both here. Let me, if I may, start, Barry, with you. This market is moving smartly ahead. Are you surprised as some that with everything that is happening externally to the markets, that we're seeing these kinds of advances?
Not really, Lou. There's so much stimulation in the economy with the Fed's zero interest rate policy and QE2 that there's a lot of money sloshing around, and it's clearly going into liquid stock assets.
And are we to, Harry, are we to expect this to continue? I mean, this market is, we always talk about a wall of worry. I don't think we can add much more to the cauldron for it, do you? To mix my metaphors, if I may.
Yeah, I think we're walking a tightrope. You know, QE2 has been said, QE2 is coming to an end this summer. You know, we've got enormous uncertainty and unrest and geopolitical issues all around the world, yet the market continues to shrug it off. So, you know, we run a contrarian long-short fund, so we're able to capitalize and protect the portfolio and take advantage of volatility at the same time. But you know, so on the one hand, we're worried. On the other hand, we see opportunity. Volatility creates opportunity.
And Barry, I assume you agree with that. Let me ask you both. Let's get we're going to ask you to trade on the spot. Berkshire Hathaway, David Sokol leaving, a hole there in the management, as Liz Kleeman just said. What are your first reactions?
Well, he clearly had a long list. Obviously, Dave Sokol was at the top of that list. So I'm sure he's got choice 2, 3, and 4 lined up, and I'm sure this isn't fully surprising that he's leaving at this point.
Harry?
Yeah, I agree with that. I mean, Berkshire Hathaway is an extraordinary organization, and each company really runs on its own. I mean, that's how, you know, Berkshire has such small office and so few support staff. So I don't think it's an issue.
And big returns and big numbers. Harry, let me start with you on this. What do you expect going forward? Is there a place here for the investor, or is this a place to be cautious, careful, and hesitant?
Are we talking about the market or Berkshire?
Oh, we are. The market.
The market.
You've already told us that you've got no problem at Berkshire, so we're moving on to where we might have a few.
No, I think, yeah, I think it's time for the investor to be cautious. The market seems to go up every day, and I don't think there's a rush to chase the market. The fundamentals dictate that it's time to pause. So, you know, it's difficult for investors to do that. When the market goes up every day, they're afraid they're going to miss something. But I think it's time to be careful.
Yeah. The whole key is Washington this week with deficit reduction. Without deficit reduction, I think we're going to have a problem with the dollar and a problem with interest rates.
And that's a problem for all of us.
Big time.
Harry, thank you very much, Harry. Thank you. We appreciate it.